Welcome back to Investing with Confidence. I am your host, Joshua David. Having a great day. It's been a phenomenal week. A little bit of rain, a little bit of snow, colder weather. It's November here in Minnesota. Al, do you love this fall weather or actually coming into winter?
Well, I love the fall weather. This is just like a little practice session, I think, for what's coming down the road. So
Yeah.
if you're not happy with the way it is now, you're not going to be happy in a month or two either.
What's nice about trading and investing in the stock market is always warm inside. If you happen to miss two tickets for that investing class right here in Bloomington, for callers 1 through 10, just call 952-814-4410. In this class, Al goes over different topics like how to manage risk and navigate these volatile markets, our step-by-step rules-based strategy, really for trading any asset like stock options, futures, or Forex in any market, but also how to buy at wholesale and sell at retail, just like the institutions do. He was talking about how to time the market. You can also text the word invest to the number 484848 for this investing class right here in Bloomington. You can also do that online. It's about 45 minutes online. So, Al, as we continue talking about the income potential in the financial markets, there's great opportunity and great potential, but you have to learn the skills and techniques to trade like that smart money, like the institutions, which is understanding those turns in price. Well, you also have to do that in your retirement accounts as well. Now, that would be like 401ks and IRAs, 403bs, whatever that might be, because those are invested in typically mutual funds where typically they underperform the market anyway, but you still got to make smarter investing decisions within them if you don't have a lot of access to them. So let's talk about, when people retire, their job stops, right? They are unemployed and they have to rely on what they've built up over the years, probably 30, 40, 50 years of working, hopefully less. Hopefully they had an opportunity to retire early and enjoy life because that's what it's all about. But if they don't have enough in a wealth bucket like a 401k IRA, how do you help people use what they do have to have income potential during that retirement time?
Yeah, it's really more important, not necessarily how much you have in your retirement account, but what's more important is what you can do with it, how much income you can generate off of it, how you can grow it. And there really is no one size fits all strategy or plan. People are different. What you look for in retirement is different. What do you want your retirement lifestyle to look like? Where are you going to live? What are you going to do? What kind of income are you going to need to be able to live the lifestyle you want? I think a lot of people do this differently, kind of backwards. They'll look at what they have and they'll go through some sort of a program that tells them what they'll have when they retire. Basically, the program's telling you what your lifestyle is going to be like. We prefer to have you start with what you want your lifestyle to look like, and then let's help you bridge the gap from where you are now to where that lifestyle, your ideal lifestyle, is going to be. For some people, it may mean doing something that's totally different that you're doing now. And for a lot of people, it means changing because you're looking at maybe 25, 35, 40 years in retirement. You can't plan on everything that's going to happen to you or that's going to happen in the world. So number one, you have to be agile. You have to be able to know how to make changes if you need to make changes, but understand what you want your lifestyle to look like. Let's identify that and then identify the right things for you to do. And I'll tell you, the number one thing that we want you to concentrate on is how to reduce fees. Because the fees, and now inflation, you got to add that in there too, but just the fees. There's two basic fee categories for all of those retirement plans, the employer-sponsored plans. One is the plan investment fee, and then the other is the plan administration cost itself. Both are paid regardless of the market and what's happening and regardless of your returns. The investment fees are paid on the balance that you have, not on the returns you get. And if the market is flat or if the market is down and you are in mutual funds or in an employer-sponsored plan that will only benefit in an up market, it means that the fund manager has to significantly outperform in up markets. What we found, and this is the truth, is that 80 to 90% of them, the actively managed investment funds, that is, underperform the benchmarks. So, how do you get ahead if those are the stats that you're looking at? Well, maybe you take control. Learn to take control of the assets you have. Learn to trade assets that give you greater benefits. And they're the same assets we were talking about before, the leveraged assets. Learn how to protect what you have. A lot of people maybe buy real estate and they'll just sit on a home and just let it appreciate. Other people buy real estate, it appreciates, and they rent it out. Those people do better with that piece of property. You can do the same thing with your assets using options.
Sure, that's a good strategy. Let's not forget that for the last segment. Talk about those option strategies. But you're funny. It's funny you were talking about that program that tells people, well, here's what you're going to have when you retire, and here's how your lifestyle is going to look. I was actually have that conversation 2 days ago with my parents, and they were talking about. They're like, we remember talking with these people, and here's what we're going to have, and here's how great our returns are going to be over the next so many years. And they said, you know what? It's not anything like what they said. And that's unfortunate because they're living less of a lifestyle during retirement. But that's like a lot of people that are listening right now. They're being told that how great and rainbows and puppy dogs and flowers, how great it's going to be. Well, that is a guess and hoping the market goes up forever and ever and ever. And we know that's not the case. So you got to protect what you have and but make smart investing decisions to continue income potential during those retirement years. So if you want to learn more about different ways to have income potential during retirement, different techniques and strategies to use in your 401ks, your IRAs. We have investing classes right here in Bloomington to introduce you to those techniques and concepts, but to get started right away and do that to protect what you have. So just text the word invest to the number 484848. When you do that, we'll send a link back with a text back with a link. Register for this class, whether it's here or online. You're going to get a financial quick start kit just for doing that, and that'll actually help you start right away. So we talked about what people need to do, and I guess in our opinion, what people should do to hopefully reach that promised land. Those golden years is what they say. Make sure they're golden and not just copper, right? Now, how do people actually take over their retirements? How do people actually be able to manage their 401ks and IRAs? How do you help people kind of go down that path?
Well, first of all, you need to remember that that's your money. It is whatever is in that 401k that you've worked maybe 30, 40 years for is yours. If you leave a company for any reason, that's your money to take with you. And the interesting, it's kind of scary, Josh, is that there's over $1.4 trillion in unclaimed 401k plans that people forget to take with them. So maybe that's where you start. If you left a company a while ago, maybe you had a 401k, maybe you had some money there that you left with that company. So the first thing, know what you have, and then know it's yours, and know that you can take it with you. You can put it into a self-directed IRA. You can roll it into a self-directed IRA without any penalties, without any tax consequence. Now, what have you done? You've eliminated the fees that can take as much as 50 to 75% away from what you have. You've eliminated those fees. You have access to those leverage investments, which give you an opportunity, again, to put a small amount of money into something and put the potential for a much greater return. You can have protection. If the market's going down, at the very least, you want to make sure you don't go down with it. So you can protect your assets, but better yet, in those self-directed accounts, you can benefit in a down market. The markets go down much faster, 3 times, 4 times faster than they go up. So you have a great opportunity there with what will undoubtedly be some corrections coming up over the course of your retirement years, probably 1 or 2 bear markets. You can benefit in those directions, but you can also make sure that you know how to generate income off of what you have. You know how to grow it, and at the same time, protect it. Make sure that somebody else doesn't end up with what you've worked so hard for.
Yeah, those fees, that 4-letter word fees is probably one of the most detrimental things to retirement accounts. But that just by that alone, people have the potential to just have more returns just based off there's less fee.
Correct.
Right? That's why most returns are so low with brokers and advisors. They're so low. I mean, whatever they say, 8, 10% is kind of an average what they're getting. And if the market's performing a lot more than that, Where's the rest going? Now think about that if you have retirement accounts, but you also need to have the right assets in there to diversify those portfolios, having
Right.
some
Hmm.
stocks, some options, some futures, some currencies, and really hedge inflation. And that's how you do that, is being properly diversified, especially in your retirement accounts. So if you want to be introduced to those techniques to have the potential to lower fees, be in the right assets within your retirement account. Say you have an old 401k. Hey,
Get it?
maybe move that to an IRA and direct it yourself to just eliminate those fees. Just call 952-814-4410 for callers 1 through 10 for 2 tickets to an investing class here in Bloomington. Al teaches these, and these are about 2 hours, and these are classes where we've taught thousands just like you are many strategies to help you make smarter investing decisions. You can also text the word invest to the number 484848. Al, coming up next, I want to get into, I guess, more of an overview on what trading and investing actually looks like. Some people don't really understand the concept and
Sure.
what that looks like as a trader or investor. So we'll do that coming up next. 952-814-4410. We'll be right back.